Live, all right.
Yep.
Welcome everyone to Two Accountants, One GAAP, where two accountants get together and discuss GAAP and maybe IFRS. But my name's Andrew. I'm here with my co-host Bacon, and we decided to make this channel just to kind of go over some topics on YouTube I think that are under discussed. Um, yeah, Bacon, I'll allow you to introduce yourself. You want to go ahead?
Yeah, I'm just a guy. I'll reveal my name when we hit 100K subs. How about that?
How did you do that?
Yeah. Like, all right. So my professional background isn't really accounting. So you're worth 4 accountants, and I'm worth -2. So we still have 2 accountants, one gap.
I say so.
Uh, no, but like yeah. Just a student learning along the way, and I imagine I'll keep learning along the way. Uh, so and accounting happens to be one of the majors. The other is finance right now. So
Oh, are you a dual
yep,
major?
yeah, I'm a double major.
Oh,
Double
damn.
major. Yep.
I
So
barely made by my accounting major in college, so.
I'm struggling. I'm struggling, chief, but
Uh,
we'll get there. Yeah. So what topic do you have for us to start the channel off with?
so we're gonna go basic. We're gonna go. This is a channel where we just want to go start at a fundamental building block and go from there. So, like I said, I feel like one of the things that I see when I look at YouTube finance or just people YouTube discussion around finance, investing, I think that is a very large lack of understanding on one financial content or financial content that companies release, and just a basic lack of understanding on finance itself. It seems they're more narrative driven
Hmm.
channels. And so one of the things we're gonna do is just kind of be a place where it's very sort of fundamental building blocks, and then we'll kind of, it's our channel. We can do whatever we want. It's our rules. So we might end up branching off into little fun things. I like covering government accounting from time to time because I find it fascinating in a bad way, but fascinating nonetheless. Um, and go into different things like that. Today, though, I think I wanted to start with just an overview. So I think the majority of people that are going to watch this are going to be people probably more interested in the public markets or investing. Um, and so what I want to do is say, let's look at a basic investor relations page, understand even what that is. We'll start with the largest companies in the world and go from there. So what I'm going to do is I'm going to share my screen. Okay. So the first place you're going to find anything on these companies is their investor relations page. Now, you could also use, there are things that are data aggregators, things like ticker.com. Um, Yahoo Finance is a fairly basic one, but those give you a very truncated version of financials. And we at some point maybe can cover those, which ones we like, which ones we don't like. But what we're going to do is look at Google today, look at the investor relations page on their website, and just kind of break down what different things are, what you should pay attention to, what you shouldn't. So if I go to investor relations for Alphabet, Bacon, what are the things that I should be looking for? What are the reports that matter? What are reports that don't? I guess.
Well, I mean, some would say many of them would matter for sure. Like any sort of changes in beneficial ownership, or some people really like using that as a screen as far as
Mhm.
buys or sells clustered, or like by how much and by whom. But for the bedrock, I would say it's what, the 10K 10Q.
Yeah, I would say so. You go on these pages and people focus on so many things. On the a lot of the communities, they will. It's really interesting. They will go into detail on everything. They'll read every ESG update. They don't go into the actual financial statements and read the 10Ks or the 10Qs. So so people we can back up and understand, companies that are publicly traded in the U.S. There's certain standards that they have to meet. So Google and most companies like it, but especially companies this size, they have a certain requirement to file 4 times a year. Reports, basically. So you have 10Qs, which are quarterly reports, and then once a year they issue their 10K, which is their annual report. 10Qs are fairly comprehensive, so if I look at the average 10Q that they have, you pull it up here. It's a 46-page document, which is fairly large. You'll have your set of financials in here, which we'll cover in depth later on, and just some other discussion analysis around that. If you go to a 10K, however, it's about twice the size here. Really, for them, it's surprisingly not that large. But, I would think a company their size actually might have a larger. I've seen some companies that have like 400-page 10Ks. It's all about the company and what they need to disclose.
Yep.
10Ks, though, they start off with just explaining what the business is and who they are. That's why I tell people it's actually a really good thing. If you want to learn about a business and what they do fundamentally, go to a 10K, click on the business here, and they will go into just everything about their company. They'll break out each segment. So here's Google Services, here's Moonshots, how they make money, their different advertising, Google Clouds. They will go into all of their different segments pretty in depth. The other thing that they'll break out here a lot of times is their main competition as they see it, and different things that I think are very useful if you're starting to look at a company. And then they will also have financials on here and a lot more detailed explanations because these are financial statements that are audited. The audited financials. So then they have the discussion from the auditors on there as well. So a 10K is an audited financial statement, whereas a 10Q is reviewed by auditors, but not audited, which basically is just like a lower level of like a not as in detail review by the auditors.
Yeah.
So I guess it's a very basic. I'm just trying to think before I go into that anything else. And the reason I want to say just focus on these, Google makes it really easy because when you open up their investor relations page, you just have it right there.
Yep.
But if you go here to SEC filings, where you'll go for a lot of where a lot of companies will just default to. Oh, so they use an email. Okay, so here they don't even let me see just all filings. They probably have so many. We do current reports.
Yep.
So these are 8Ks, proxy filings. Okay, Google's really not got a lot. I'm just trying to think of one where you could probably go. Just look at Amazon real quick.
Yeah, sure.
Because I just want to kind of give an example of how this looks.
Yep.
So
with a clean interface, because I like to punish myself and go to SEC Edgar, and the interface there can be painful, but.
Yeah. Oh, dude, Edgar is. So for those that don't know, every company, they're required to file these forms with the SEC. And Edgar is where you go. Edgar is actually, I think, really fast too. I think if you're on an earnings report date, you'll find it here quickly.
Yep.
I'm usually not trying to find it the second before everyone else is. But it feels like a government website.
Yes. It
Very
is.
rough.
It is painful, but if you find the right search bar and know your company's ticker and what you're looking for, it's not as painful.
Right.
But yes, Amazon.
Well, and this is just because they're a better example where you can see if I go to 24, 23, they're just. Sorry, dog is smacking her head on the. That's Tilly. She's the other one joining us. She'll probably be here for most of these. But you can see there's just a lot of different forms here. And I would say for the majority of these, until we get further along, I probably wouldn't worry about most of them. Concern yourself with the 10K, concern yourself with the 10Q, and we can eventually look into things like these. I mean, these are mostly informational. If you click on these.
Yeah, it's some people will blow those out of proportion and say, "Oh no, big number," but shareholder still holds even bigger number.
Yeah, it's like Bezos sold $1 billion of the shares. It's like, oh man, what's he gonna do with the other 300 billion or how much? So anyways, So we'll go back now to Google. I just want to kind of do a sidebar and just say you'll see a lot of noise there. Don't worry about the noise. Focus rather instead on what's important. I think for most investors, you should be able to understand this form. What I think we'll do, because I don't want these to be like extremely long videos to start off with.
Yeah.
We will hop into, and just so this makes sense, we'll hop into just a brief overview of financial statements. What we'll probably do is dig a little deeper into them. But just look at the financial statements and may emphasize how important MD&A is. So one of the nice things about these is they have hyperlinks. They actually, fun fact, this is a requirement for publicly traded companies to have. There's like I had to learn this for my CPA, but there's like an official term for it, but they have to put it in a format so you can like link. You can click on this. So, oh yeah, the opinion on the financial statements because this is the auditor's report.
Yep.
So whenever you can explain what an auditor's report is and why it's relevant and how it comes up.
Can I though?
Mm-hmm.
Yeah. So the independent auditors get paid by the board of a company's board of directors. They're supposed to be separate from the direct company themselves, and in the process of their audit, they're supposed to at the end give their opinion. In general, you would like to look for the word unqualified. Sometimes not all opinions give that, but they kind of loosely worded around an unqualified opinion or a qualified opinion. And if it's qualified, then you'll dig through. Well, why is it? The qualified isn't like the auditors aren't certified or anything like that. It's more of a we're giving this a seal of approval, but we do take issue with certain things. And that would it's also very important to look at their basis for their critical for their audit opinion, but also the any critical audit matters. So it's not necessarily that a company's executive team are doing anything illegal or awful, but there are things that may not necessarily work with GAAP or aren't as clear with GAAP conventions or standards.
Yeah, and so there's different levels, and I'm sure we can probably do a whole. We'll do a whole episode just on like auditors issuing opinions, what they issue, how they issue. The main thing to know is they're going to issue an opinion for now, because remember we're going basic, and it's funny because like in some ways I think you explained it better than me, but they're going to issue an opinion, and basically what they're saying is whether or not the management's materially stated their financials accurately.
Yeah.
So basically, I mean, most of these companies you're going to look at, they're going to say it's clean. They're going to say it's unqualified. If you're buying a company that has something other than an unqualified opinion, I'd be very concerned. Just at this point, until you can understand the nuances. And as you said, there's critical audit matters. And what they'll do is they'll say, hey, we might have had some disagreements with management, or we might have had some things that we need to talk about to understand, and they'll go through that. Eventually, we'll go through that a little more in detail. And they'll be signed by who did the audit right here.
Yep.
So
I do want to circle back one thing though. For those that are completely unfamiliar, that's perfectly all right. I was there not crazy long ago myself. GAAP, accounting, generally accepted accounting principles. It's an acronym. Who generates GAAP? What would be the PCAOB? Basically, it would be a combination of professionals, academics, and both. And the professionals, we're talking both public and private sector. They get together and they have determine what is GAAP. There's FASB, which also is an important organization that helps dictate what makes up GAAP. Feel free to yell at me if I am wrong, by the way, because
no, I think so. So Peekaboo PCOB is the one that enforces it for public companies.
Yep.
Is FASB. I think they're the ones that are actually like set the GAAP standards.
Yeah.
Right. Yeah. So you have all of these like you have different reporting requirements based on what kind of company you are. So if you're a government accounting authority, you're not you actually don't have GAAP reporting. You have GAPS reporting.
Yep.
And so, or is it good gas?
GASB.
GASB. That's right.
Yeah. GASB. Yep.
Yeah. So there's different oversight boards, and like I said, the reason we're making this channel is because like I think one, we're both nerds and we enjoy this. But two is like I actually think that a lot of people don't understand this. I don't think there's a lot of material that really goes into this belt to understand what's going on here. What am I looking at? I'm a person who has my background's in, engineering or marketing or something. I want to get into the understand equity. So how do I start? And I think, this is just a good place to start. And then, we'll probably, like I said, at some point branch off. But for now, that's what we're focusing on.
Yeah.
So you then get to the financial reports. And Bacon, do you know the 4 financial reports? We joke because there's technically, well, we'll get to it, but yeah, what are the 4 financial reports? And
yeah, most people care about 3, but yes, there are 4, which would be the balance sheet. Some people would call it like the financial position, but generally speaking, balance sheet. We also have the income statement, and we also have statement of cash flows. And we also have shareholders' equity or retained earnings statement of.
Right. So, fun thing, just a complete side note that isn't super important, but I think it's just fun. Did you know that? I think you know this. That statement of cash flows isn't GAAP.
See, it was one of those things that like I've heard from you and other professional accountants, but when I mentioned that in a class, I didn't get yelled at, but they're like, "Oh no, it's GAAP." I'm like, okay. It's
a non-GAAP financial measure, but
yeah, like
it doesn't matter because on audit, I think probably what they were saying in your class was that in audited financials, you're always going to have a statement of cash flows.
Yeah.
So, and we'll get into a little bit further, but just on a very basic level, what is the balance sheet telling you?
All right. So the balance sheet is the snapshot, the only moment of time. If Alphabet had it, it would have said on the day of blah blah blah. And all it is your assets, your liabilities, shareholders' equity. What does all that mean? Broadly speaking, what you own at that exact moment in time,
Right.
what you owe that exact moment of time, and also what's left over, which should be shareholders' equity.
Right.
From an accounting perspective, by the way, this
Exactly.
isn't like shareholders' equity is like, oh, it should be worth this or that. Yeah.
So assets are what you own, liabilities are what you owe. Stockholders' equity is basically what's left over.
Yep.
So you could have a negative stockholders' equity if liabilities, what you owe, is more than what you own. Okay. Which some companies do have on occasion. It's not. I mean, it's not uncommon if you have a lot of debt, someone levers you up. Who knows?
Yeah. Big name that has negative shareholders' equity is McDonald's, or at least they've had it for the longest while. But we don't have to. We don't have to do that right this second.
Really?
I want to say so. At least for a good while there.
And then no, totally fine. Yep. Statement of income.
All right. So when it comes to the income, people may ask themselves, "I'm running a company. How do I account for sales?" But maybe they say, "Well, just keep it simple, stupid. Follow the cash." But that is not what true accounting is. GAAP would say, "No. We have to do things in a conservative manner." Well, what does that mean? Well, revenue. You would think sales, not necessarily though, because it's all about the revenue recognition principle in accounting, which would be say you own a company, I buy something from you, I give you money, but you haven't done it yet. Are you able to recognize that as revenue? No, you haven't done the thing for me yet.
Right.
There's an obligation. So once that
Right.
obligation is met according to US GAAP, then you recognize it as revenue. So there can be a disconnect with revenues and cash.
Mm-hmm.
So we have our revenues, but then we also have usually what's called cost of goods sold, cost of revenue, what have you, which is basically what did it take to meet that obligation. So maybe it was research, maybe it's workers like making a widget, and then like their blood, sweat, and tears, the
Yeah.
paycheck for that, that's a cost of revenue.
Mm-hmm.
So that's one of them, one of the
Right.
components. Down a little bit lower down, we'll have things like R&D. We'll have some people lump together SG&A, sales,
Mm-hmm.
general, marketing. Your executives. We'll filter a little bit lower and lower. So we got our income from operations, which would be sales less
Yeah.
all the things that we just covered, and then eventually we'll hit bottom line net income. Uh,
Right.
yeah.
And so one of the things that I want to point out about these statements of income that you see here on these um, uh, what's the word I'm looking for? On these 10Ks, 10Qs, these are extremely truncated. These are
Yes.
extremely simplified. I work I work in the accounting for a company much smaller than Alphabet, and we have probably 200 at least. I have to look at the exact just GL accounts, just this buckets basically. Think of accounts, different accounts as buckets. We have at least 200 of those. Not to mention like the different. There's a bunch of different like individual breakouts, like sub breakouts from there. So these are extremely simplified. So one of the things you have to understand as an investor looking at this is that you don't have everything, right? So like people like me, I would love to see like and we'll get into you can get additional information other than just this thing. I think a lot of people this is where they stop. They might look at this, or they just might look. They don't even look at the 10Q, they look at a data aggregator,
Yep.
and don't actually look at the things that you can get access to get a little more information.
Yes.
But like, if this is me, because think about this, and this might be getting a little bit ahead, but when you buy these companies, you own the business. You are an owner of the company. So I think Warren Buffett's the famous one. I don't like overquoting him, but he's the famous one that like he buys it. Like it's actually your company. This is your. Well, would you be super happy if this was all you knew about the company's financials if you owned it outright? No. So you want to be able to get more information than just this.
Mm-hmm.
But we'll cover that at a later date. But the next thing you have is I don't know why. Standard comprehensive income. It's just breaking out OCI, right?
Yep. Other comprehensive income,
Yeah.
which, I want to say that's a little bit more complicated because that one got covered in my intermediate accounting class, which we can do later, I think.
Yeah, but basically, this isn't one of the four statements. This basically is just giving more detail to. So, I guess what we'll cover very quickly.
Yep.
Because you have your income from operations, and I think this is breaking out OCI.
Yeah.
Comprehensive income.
Yep.
Yeah, it's just a little bit of a further breakdown of your statements of income. Me personally, this is actually one I don't look that much at unless, because to me, I'm not going to get to this. A lot of these things that they have in here are things that aren't vital to the business that they're breaking out. Like if I'm really worried about because when I'm looking at a company, I care about how it's going to look in the future, how the actual operations of the business work. This is breaking out things like how much money we made or lost from foreign currency, like translation, like basically FX or like the fluctuations in US dollars versus euros.
Yeah.
Not something you're going to really care about. How much money they gain or lost on hedges, things like that. So I would be super concerned.
Yeah.
And then we have Bacon's favorite financial statement here, which is the statement of stockholders' equity. And do you want to break out what this is?
I'd like to think it's relatively straightforward. Also, to double back, the balance sheet is the only one that's at snapshot in statement of income, and this are periodic. So if it's an annual, it's the 1 year. If it's a quarterly, it's for that quarter. Yeah, that is one important nuance to remember. But yeah, so the statement of stockholders' equity, we take into account, shares issued, shares paid, any sort of net income. I'm used to it being called like statement of retained earnings, and the way that I've always heard it explained to me was, if we view an income statement as a grade for like a quarter or a semester or whatever system some students go through, this is kind of like a cumulative GPA. So it's important to note and respect, but some people don't really care as much about it. But I do like how Google breaks out, though, like any sort of share issuance and share repurchase. Fundamentally, as you said, you are an owner of a company, but you're not the only owner of this company. There are plenty of others, and how that ownership structure looks and how it changes, it's important to know, which I imagine we'll get into in greater depth going forward.
No, we definitely will.
Yeah.
I mean, we will at some point spend like individual episodes on each of these financials. Maybe not stockholders' equity.
No, but like the mechanics, though, of like share purchases or share issuance, and why sometimes it's really important, and why, depending on the company, maybe not as much.
And to anyone wondering, this isn't Bacon's favorite one. We just joke because I always say there's 3 financial statements.
Yeah.
And he reminds me there's actually a 4th. It's the
Technically,
forgotten stepchild.
Yeah.
And then finally, we have the statement of cash flows.
Yes. So now we go from the accounting mindset of what's a sale, what's an expense, to keep it simple, stupid, follow the cash. And some people say, why not do this and only this? Well, some companies have lumpy cash flows, and GAAP accounting may not be perfect, but at least tries to grasp some of the nuances. And in which case, we consider things like cash related to operating activities, cash related to investing activities, cash related to finance activities, and then at the bottom we have any changes or decreases in cash. And again, we'll get into greater detail on this one for sure, but there are common misconceptions on what's a financing activity and what's an investing activity. So yeah, we'll get there. Be patient, and we'll get in greater detail.
The other thing that's something interesting to note. Well, I'm just going to give one of the things that I think also about a cash flow statement is what you're basically doing is reconciling your net income to the change in your bank account, right?
Yeah.
You said you made $100 million, but your bank account went up by $3 million. Like, why is there a discrepancy there? And so it's kind of walking through here in this schedule and explaining, okay, well, here's net income, and this is indirect method. Not that that matters, but this is indirect. And it's going to tell you, well, here's net income, and here's the different things that affected either positively or negatively our cash flow, the actual cash in our bank. One of the things you will hear, and they're correct when they say this, it's just interesting about Google, is they have 100 billion plus of cash. One of the things that's interesting about the cash flow statement that you might want to know, they have cash and cash equivalents, like 100 billion. This only ties up to the cash in the bank. One of the things you have to take into account is just did I just do it right here?
Balance sheet, yeah.
So here's the cash and equivalents that they're planning out to. These marketable securities for Google, it's almost exclusively like short-term U.S. Treasuries, which is cash. they're not going to tie out, the cash flow statement isn't going to tie into this. But I mean, which I wish they would. I just think it's like easier. I mean, it makes sense. Like they even almost bucket it as the same thing here, where they have it even like total cash equivalents and marketable securities. But you know, they follow the correct method on how to do this. They just tie out to cash and equivalents.
Yep.
Now, one of the most important things, and this is what we're going to just touch on. We're not going to go into too much detail about it. We're going to keep it high level. We'll dig into the details, in another episode. Is the notes to the financial statements. This is something that you really, the canvas does not really want to be able to actually go through if you want to understand the business, right? You give a high level statement of income, balance sheet, and all these things. If you want to see the details, you go here. So for example, they will break out revenue by region, revenue by business segment. They will explain to you probably in more detail each business segment's financial situation. So here's like disaggregated revenues. So they're breaking out of the revenues that we had up top, and this will tie out, total revenue. This will tie out perfectly to the statement of income.
Yep.
But it breaks out, so so in 2023 they had 175 billion from Google search. They had 31 billion from YouTube ads. Google Network is another segment a lot of people don't know as much about. It's like their sell-side platform, I think, primarily. Also, like the Google Suite. So when you think of like Gmail, Sheets,
yep,
all that. Anyways, point is, and then here it is by regions. 46% of the revenue comes from the U.S. 31, et cetera, et cetera, et cetera. So really important to understand these if you're actually going to be able to understand the company and how they're actually doing. This is part of the reason why, once again, I'm not trying to get too far into it. A company might do an earnings report, and you look at it and you go, oh, they beat on revenue, they beat on earnings. Well, if they had these beats, why is the stock down? Well, that top line doesn't tell you everything.
Yeah.
Or the bottom line doesn't tell you everything. It's the details sometimes that matter.
Mm-hmm.
If I see Google beats their top line, bottom line, but then I look at their revenue backlog, and instead of 74 billion here, it was 10 billion, I'd be a little concerned because it's like, oh no, they're not making any new sales. There's a lot of like details that you have to understand.
Yeah.
We'll get into every company is going to have their own notes. Notes are not standardized like the financial statements are.
Yes.
And so what you're going to have to do is know each company well, know what you think are the drivers for the future growth of the business, and see if in the notes that gets broken out. But that's the very, very surface level, very, very top level overview of this. Just want to start kind of give people a place to start. So maybe you can understand here's at a basic level what the different financial statements are. And then this we can use the building block to then go into more detail, things like the balance sheet, income statement, cash flow statement, and break out just what each line is really telling you. I don't know if you had anything to add to that, Nathan.
No, I thought you did great.
So did you. Good, wonderful, man.
Thank you.
Well, with that being said, we are 2 accountants, 1 GAAP, signing off until next time.